What's up, everybody? It's your financial architect, Andrew Carroll. And I had this idea tonight while I was at home checking out some business news to start coming at you with the Drew's letter. But it's a video, bud. So that should be a good time, right? I was scrolling through the Google News feed tonight and I noticed that there was a stock that lost 98% of its value this morning, Thursday, November 21st. So I started reading through that article. Obviously, here at Wealth Factory, we kind of have the opinion that we want to invest our money where we know that it fits our sole purpose, our investor DNA, and where we can be sure that we get a good return. So, ArtGo is a marble mining company out of Hong Kong, and they were set to be the world's best performing stock for firms worth over $1 billion. $1 billion. They lost 98% of their value this morning, Thursday, November 21st. Like I said, $5.7 billion of market capital wiped out. Wiped out. Gone. Gone, right? That's crazy. Um, Further along into the article, you find out that a company called MSCI, a global provider of equity and fixed income, hedge funds, stock market indexes, and multi asset portfolio analysis tools, had mentioned that they might include them in one of their influential indexes. Well, just yesterday or today, they announced that they would not be including ArtGo in their influential index fund. The reason for that was that David Webb had done some research and it looked like that ArtGo was an actual bubble. It was a bubble. There was some suspicious trading going on, and so he reached out to the Securities and Futures Commission in Hong Kong to let them know that this seemed suspicious, and they started an investigation. They have not updated anybody on anything that they've found, but I just want to point this out to you. So in U.S. dollars, November 22nd, 2018, that stock, ArtGo stock, was worth 5 cents. November 22nd, 2018, that stock is worth 5 cents. November 20th, 2019, that's yesterday, the stock was worth $1.89. That is a 3,780% increase in 363 days. Now, I want you to stop and think about what's going to happen if you're working with an investment advisor or someone else who is telling you, you know, I've got my finger on the pulse. I'm working to check out all these stocks and these funds, and I'm really trying to set you up for your future. I'm just going to take a little slice of that pie, over the course of the retirement fund or whatever. Now they see a stock that is increasing in price, 3,000, 4,000% over the course of the year. Probably going to be pretty tempted to move your money in that direction, right? Well, in the course of less than 12 hours, that stock went from $1.89, lost 98% of its value, and is now valued as of November 21st, 2019 at 4 cents per share. That is insane. You just lost 98% of your investment like that. It's crazy. That could have been your nest egg, right? That could have been part of your 401k, part of your investment strategy. You hadn't done the research. And this just really, really, really solidifies the principles and values that we're trying to share with you here at Wealth Factory to help you remain secure, invest where you understand and feel that there's a purpose and value-driven need for you to be involved in that, where you're educated and you're passionate to find a good return on your money, to put it to work for you. So I just want to point out that this isn't uncommon for Hong Kong. There have been numerous other cases where a stock has been falsely inflated like this and has lost a ton of its value, some reported as 91%. And it just goes to show you how vulnerable the market is to manipulation when people aren't paying attention, or when people are paying attention, even more dangerous. Fun fact, just to let you know, Hong Kong as a city entered its first recession in over a decade, losing 3.2% of its GDP in the third quarter. So obviously this is offshore, maybe not too close to home, but still, the Hong Kong financial market is something that people are paying attention to. They are becoming a large hub of finance globally. And what's going on there? It's pretty likely that those people got experience and learned it somewhere. Our financial industry is rife with the potential for manipulation, and backdoor deals in some ways. And we want to work really, really hard to make sure that we're investing our money in places that matter, that make sense to us, that we understand, and that we control. So again, this is the first edition of the Drew's Letter. It's a video, bud. So I hope you enjoyed it. I hope it was informational, and I hope it adds some value for you. Take care. We'll talk soon. Bye.